Charles, there's so much negativity right now in the news. The headlines are all doom and gloom. What are you making of it all?
The more you read, the more doom and gloom you hear, Paul, don't you? So my view would be to don't believe half the stuff you read. Yeah, the market is tricky. It's significantly more expensive to borrow money now than it was a year ago. We thought we'd seen a little bit of a fallback in May, but swaps are now pricing higher, and we're seeing banks pulling rates and repricing, but only repricing upwards.
Yeah.
So it is tough.
So swap rate is how banks price money, and that's determined by market news. So give you an idea, core inflation recently went up, and as a result, the capital markets reacted negatively. And as a result, the projection forecast is base rate will stay higher for longer. And we're seeing that now with the sentiment being that interest rates and mortgage costs are much higher than what we were going to be forecasting. Charles, what do you think the key message we should be giving to customers and clients right now?
Two things for me, Paul. Number one is act quickly. Don't sit around and wait for things to happen. You've got to make things happen. And secondly, talk to a specialist. We are specialists, and I'm bound to say that, but it really is important to talk to a specialist because a specialist has a greater feel for the marketplace, is not restricted to a smaller panel of funds they can work with, and is used to dealing with situations that we're currently in. And I think it's really important that you do that and act quickly.
I think for me, residential mortgages, speaking to a professional advisor, there are things like payment holidays. You can switch from repayment to interest only. There are things you can do to help. You can possibly do a let to buy, or you can let your existing property and move into another. That's on the residential side. But what would you do if you're having a bit of stress and challenges in the commercial space?
I think the first thing to do is put your hand up and acknowledge that you're in that space. And secondly, is to talk to your lender. Don't let the problem build and build. And it's a bit like a snowball. You can handle a snowball. If you let it continue to roll and roll, it bowls you over and you're soon bowled over. So speak to your bank because there are things that banks will do. We as a specialist brokerage will work with you to help you through that journey as well. It's about taking action and being quick to it.
I think quick action is something that I've learned over the years that trying to see, unfortunately, the next 6 to 12 months are going to be difficult until we see core inflation reducing. Swap rates are not going to go anywhere other than up. And I think people that are having what we call payment shock, where they were paying mortgages between 1% and 2%, for the last 15 years, we've had low to no interest rates.
Yeah, and people have got so used to that and know no different. But we're in a cycle now where costs of borrowing have in some cases tripled. On the positive side, if you've got a buy-to-let or a buy-to-let portfolio, you should have been looking at your ASTs, repricing your rents, and obviously repricing upwards to help the additional costs of borrowing. And we work with a number of landlords who've been doing that. But of course, it's then the tenant being able to pay for that increase as well, because you've got to balance that against rising fuel costs, rising general living costs, just food costs and everything else. But we know in the next few months, we're going to see a reduction in energy prices. We've seen that. We've seen the caps come down. I sense that people are being more frugal than they have been for a number of years. And people need to balance the books because the most important thing in life is cash flow. If you can't pay your bills when your bill has arrived, that becomes a problem. Yeah. And we're just seeing, just as that, Paul, if someone like Ed Davey, the leader of the Lib Dems, came out this morning suggesting that the government needs to step in and provide some support. Whether they will do that, I don't know. Equally, there's messages this morning that those middle earners who have built up a saving pot for a rainy day are having to use that now, again, to balance the books. And some people will need to take action to help themselves. Some people potentially will just sell, move down, and rebalance the books.
I think sometimes for me, people make those tough decisions. I've been through it myself in my life. When we had the Lehman's crisis, we had to move out of our central London flat and we rented accommodation, which was much cheaper. And the rent on the property in London covered the rent and gave us some breathing space for our living costs. Now, sometimes people aren't prepared to make those tough decisions when cash flow is tight. And sometimes also a good thing to think about is talking to your employer to say, look, as we did in our business, we gave everyone an energy bonus at £500 per month just to help, because so many people can't cope with a cost increase swing of 10%.
No, true.
And people in life today, they go to university, they start their life with student debt. They're already in debt before they start. They have no hope of saving for a deposit to buy a house.
Yeah.
And it's super difficult. And then when costs have risen so quickly, it catches so many people out. But so many people won't do the sell their property, downsize. They won't let their existing property. They won't. In this day and age, with digital ability to work anywhere in the world, people need to take that action.
They do. And one of the things you can tend to see in times of cash flow challenges, that people build up a lot of short-term debt on multiple sort of cards. That then catches you up, because then you can't afford those ongoing repayments. So you've got to take action quickly, and you've got to be pragmatic as well. We talk about, if you decide to sell your house and downsize a little bit, often your first offer is your best offer. Yeah. If you turn down, how many times do we see that?
We see that so often where the client, it's not being greedy, it's they have a belief of what their property they think is worth, and someone of them offers a good, fair price, but they don't take it and they wait. And what we're seeing, certainly where clients are arranging bridging finance, they're paying 12% per annum to borrow money. And if you're borrowing, say, on a 2 million or a 5 million facility, if you're £250,000 short of what you want, it's going to take you another 6 months to sell. You've got debt servicing costs at 12.
Yeah.
You're always better to think, reflect, seek advice, and say, I've probably taken that lower offer, clearing my debt, getting cash flow positive, stop the high debt cost servicing to give me a chance to fight another day.
When we talk about the marketplace, we're in the specialist marketplace. If you look at that short-term funding world with bridges and short-term funders, it's really important now as a specialist advisor to make sure you've got the customer's exit absolutely nailed on. It's pointless assuming that a sale will take place. It's pointless assuming you will get a tenant. You've really got to be absolutely clear-cut, because in times when the market's volatile it is now, and at times when the sales are not as high and numerous as they were a couple of years ago, don't go into a position knowing that the exit may happen. You've got to be absolutely clear that the exit is going to happen. Really imperative piece of advice now. And we are seeing that from deals that we're placing with funders, that they're getting very particular about the exit strategy. As an example, Paul, if a customer says, I'm going to put the house on the market to sell, the funder will be back to you as an advisor maybe 3-4 months into the facility to say, has the house gone on the market? And if it hasn't, why not? And these are really quite important strategies that customers need to follow. Otherwise, you'll get trapped into that cash flow challenge again. But saying that, it can sound overly negative. It's just about being sensible. There will be opportunities that will present themselves.
Sure. There's a lot of first-time buyers there that haven't been able to afford because the numbers don't work. And they now may have been saving for a number of years. And because property prices in their area, or they may be less fortunate people that have unfortunately been repossessed, and then they're now buying a property at a between 10 to 30% discount, depending on the situation.
Yeah.
So for every negative, there's always a positive. And we are seeing some wealthier landlords that use it as a buying opportunity to add to their property portfolio.
Yeah, and they will. They absolutely will. When you and I have been working on 2 or 3 deals this week, more in this sort of development space, and we've seen some people coming towards the end of their development running out of money and looking at ways to finish the deal off and maybe refinance it. Profit on cost margins are not where they were 2 years ago. Funding costs have gone up. Construction costs have gone up, albeit there's a bit more stabilization. And those developers out there need to be absolutely sure that when they're going into something, there's enough slack and there's enough contingency in place just in case. And if everything is so tight, you potentially are walking yourself into a problem downstream. All well and good initially, but when you get to the end of your funding, when everything's fully drawn, it can present a problem. Yeah,
that's really concerning. I think for me, stay calm, talk, explore your options and then have a clear plan, I think is so important.
It is. We will know that people can tend to bury their head in the sand. The problem doesn't go away. Deal with a specialist. Ring us up. Give us an opportunity to try and help you. We may not have a solution for you.
And that's tough for some people.
Yeah.
Some people think there are options, and sometimes there isn't an option, and sometimes you're better off selling and cutting your losses and taking a smaller loss, whatever the percentage is, just to close it out and not let it become a big problem. Because we all believe, oh yeah, I'm going to sell it. I'm going to sell it for this. But sometimes that isn't realistic. And if people can't borrow because of stress testing, and what I mean by that is that if base rate's 4.5 and the mortgage rate is 6, and the lender stress tests, could you afford it at 8? It might not work. So people don't have the borrowing capacity they had before, and then transactions fall through. So I think if you're looking to buy, it's important to make sure you get pre-approved, get an agreement in principle, so that you know you're shopping with power and strength. Because otherwise we get people that say, oh yeah, I want to buy this house, but then they're like amazed that it doesn't work and their maximum is much lower than they first thought.
Yeah, I absolutely agree. And coming back to the space that we're operating on, we're finding people have got into a deal maybe 2 months ago, and now the deal's not working for them. The funding costs have gone up or something's changed, but they will come back to us because the advice we gave them 2 months ago is still valid. It's just that they've had a bit of a rethink about their own plans.
And I think sometimes people don't think of future inheritance. We don't like to talk of people passing away, but sometimes that's an often neglected question that I come across. And also, who do you bank with day to day? Because most people may have a mortgage with bank C, they bank with bank A, and normally your day-to-day bankers have a better insight to what's going on, and you might be able to get something more from your own bank than a new bank.
Correct.
And I think sometimes with boutique specialist lending, if you've got a mum and dad who are mature and elderly and there's a house being sold at 300, 500, a million, whatever the situation is, that additional bit of information may give a lender a little bit of comfort to know that the likelihood is during the next 10 years that there may be a payday that may just give them a kind of, okay, it doesn't quite fit today, but we know this could happen in the next 5 years. I think exploring all options in the story of presenting a case to a lender.
It is. And from our perspective, presenting that case to a potential new funder is where I think we play to our strengths. The experience we've got, the breadth of people we can work with is huge, from private banks, but boutique lenders, to all the buy-to-let lenders, to some of the challenger banks. They're not necessarily new now, but they're generically called challenger banks. And it just helps us to be able to craft a solution for a client. I'll come back to that. I think I said before, it's about taking advice and about taking advice quickly. I know we as a business have been circulating emails to our clients, to our introducers, just making sure they're on top of things and making sure that they're helping their clients. And we're very happy to have chats with clients to try and guide them through some of the options.
Sure. Because what we're also seeing now is that buy-to-lets, in terms of the rental calculations and the stress testing, don't work.
Sure.
And we've got a lot of clients that, again, may have a single property, they may have 3, 5, 10 properties, but when you look at the loan to values, they may think, yes, I've got lots of equity in the property, but debt servicing and stress testing, in the majority of cases I am seeing today, that client can't raise any more equity.
Correct. So you come off a fix, you're probably left with your existing lender, may not be the best rate in the marketplace, but you won't be able to move because your arrangements don't sort of support being able to refinance to a new lender. Coupled with the fact that if you're holding it in a personal name, you're going to get taxed at your personal marginal rate. We've seen a number of clients incorporate their buy-to-lets from owning them in their own names into maybe through an LP to a limited company. We've helped clients through that process over the last few years, and that has to be something that people seriously think about. But coupled with the fact you've got all the EPC stuff coming down the tracks, where buy-to-let landlords are going to have to make their existing properties more energy efficient and upgrade, maybe double glazing, change light bulbs, put insulation in. That will cost, and if they haven't got it, how is that going to be handled? We're yet to see how the government's going to support there. And then as a consequence, what do you read in the press? Well, you read in the press that landlords are selling. because they've taken the view that it just doesn't make financial sense for them if they're quite well leveraged on some of the properties they own.
I think we'll see a lot more forced selling to allow things to move forwards.
Yeah.
Where clients might want to buy another property or buy a holiday home, a second home, or they may want to help their children onto the property market. Even though they have a low loan to value, the only choice they have to get what they want done is to sell.
Yeah, yeah.
And I think the realization is for a lot of people over the next 6 months is that they have no choice but to sell. And sometimes, as we know in life, you have to take a step backwards to enable you to move forward.
Yeah. And we know that Jeremy Hunt, the Chancellor, has only got this sort of strategy in play, which is he's going to continue to increase base rate to arrest the rampant inflation.
But I think it's wrong, personally. My own personal opinion now is I think we've got it wrong.
Yeah.
I think we're trying to use blunt instruments that cause so much pain and suffering to so many, but I don't know the answer.
And I don't think they do. I think that's all they've got in their armoury, Paul, at the moment, or they appear to have in their armoury, which is disconcerting to some extent. But whether they then will come out with support to help people. We take COVID. How long ago was that? It feels like it was a long time ago, but it was only 3 years ago. The furlough scheme that was brought in by the now Prime Minister, Rishi, was a great scheme and helped a whole lot of people at the time.
A roller coaster. And I think for me, it's we need to find different solutions. I think for me, we need to innovate more. We need to find growth. We need stronger leadership, guidance, technology, efficiencies. I just think we need to go faster with our adoption of technology. And I think there needs to be more education. People talk about AI, ChatGPT. How many people are actually using it, adopting it, trying it to make things quicker, faster, better? For me, I use it all the time, but there are faster, quicker, better ways to do things. I think for us as a country, every single area in this country probably needs to adapt that a little bit more.
But we are a country that wants to buy property. That's a thing that we do, isn't it? In the UK, we want to own our own properties, where some of the European countries don't. I think it's a much more the approach is much more rent as opposed to buy. So might we see a bit more of that? I don't know. It's times are changing, and you talk about the AI and the social world we're in. That is impacting. It's impacting very quickly. And the storyboard around AI has been live for a few months, and the speed at which it is developing is unbelievable. How will it impact our industry?
I think for me, if you have an employed job and your income is X and your costs are X, you bank with a bank, they'll be able to assess affordability instantly and deliver mortgage offers far quicker in the future.
Just as I saw a caption the other day, and it was a building, and there was a ladder, and it said, AI will never be able to build this. That was its headline. I thought, okay, it's interesting.
See,
2 weeks later, I saw a concrete slab. I saw a sort of a crane, a JCB with a robotic arm, exactly, picking up the bricks, picking up the blocks, placed them in very neatly, all pre-covered in concrete, I presume. And the thing was built in a nanosecond. Yeah. So it can be done.
I think for me, when you look at ChatGPT 3.5, the IQ was, I believe, 155 and Einstein was 160. And now 3 months later with ChatGPT 4, IQ is 1,600. And that is in the space of 3 months. And I think when you look at some of the research of things, I think for me, listening to the ex-Google AI specialist, the challenge we face as humans is our limited intelligence because we feel threatened by the technology.
And there's a group of people that just won't accept it, will they? They just will not fundamentally accept it. And they will get left behind. Absolutely true. But coming back to our marketplace and the sort of lending world we operate in, I think some of the positive things, we're seeing yields obviously increase, and people are being sensible about that. So landlords are really working their portfolio harder to help themselves and allow them to service their debt, because we have a requirement for housing. The government has a requirement for housing. Years and years ago, it would have built what generically we would have called council housing, probably more affordable now. But that isn't done in the volume that it was done years ago. And the professional landlord, in my opinion, needs to be helped by the government, as opposed to what they've probably done over the last few years is impose additional taxes on landlords, made life trickier for them, want to structure them all. But actually, the professional landlord provides a good service to the housing segment in the UK. We tend to see high yields, as you will know, Paul, in the north as opposed to the south. So in terms of the specialist world, it's about helping people understand where they can get better value. So you don't necessarily get the level of capital appreciation you'll see in the north as opposed to here in the south. But at the moment, yield is key. Cash flow is key. So it tends to migrate people's thinking more towards higher yielding type assets. I'm working on a couple of cases at the moment for clients in the sort of office space, a whole sector that's been hugely hit since COVID around people not going back into offices. It doesn't mean the office is dead, and I don't think it is dead, but it means people need to be a bit more creative about how an office operates, providing services that attract people into an office. There's another sector that's been growing hugely is what we generically call later life lending, lock and leave type situations. So where customers are buying an apartment, want to spend maybe 6 months here in the UK, spend 6 months in Spain or down in Greece and Cyprus and so on, and want a safe place, but they want a place that they can work with and see people. So these sort of senior properties provide maybe a cafe, they provide gym facilities for healthy living, yeah. And people want to interact and work with people. They don't want to be sat in a cottage in the middle of nowhere. They want to be with people. And we're seeing that is an interesting sector that's been growing and where investment's been going and where banks will support.
That's really interesting. Yeah. Thanks, Charles. Thank you very much indeed for talking and insights. I think the most important thing is speak to someone, get professional advice, get help, and do it quickly.
Yeah. Be immediate.
Thank you.